Hello everybody, welcome to the Trader Merlin Show. It is your Thursday edition, getting ready for the Friday edition session where I get to have a nice cocktail on air. No cocktails today. We're talking pure markets. We'll be talking about probably the futures markets, maybe equity markets. I've got a serious market veteran here to join us today, which is going to bring us down the path of the topic du jour, which was the best times to trade with Bob Dunn will be our guest. Bob, how you doing today?
I'm doing fine. How are you guys out there?
I'm sure everyone's fantastic.
Everyone's all right.
Yeah, you know, no complaints on my end other than my horrible trade yesterday. It was so frustrating. I actually took today off from trading, but you know sometimes you got to do that if your head's not straight. So it happens.
Shake it off, and there's always a new day.
Always a new day. I love it. Bob, I want to start off with just straight into a listener question, and I've had this one many times over. Actually, even on the years of Power Trading Radio, plus the 121 shows we've done so far for Trader Merlin. And the question is this. It says, do you think that price levels formed from overnight futures is significant? And if so, would you put the same weight on those as that were formed during regular market hours? There's much less volume, but most of the volume is still large institutions. What about stocks? So I thought this is the perfect conversation piece to talk about maybe time frames. Let's start with the pre-market session and then work our way through the regular trading hours. Do you think that those prices formed overnight are as valid or should be looked at as being as significant as during regular market hours?
Okay. When you're talking pre-market session, you're talking from 6 p.m. Eastern time up until 9:30 p.m. Okay. Yes, those levels are created on much less volume. If you look at the S&Ps, the volume is probably easily 1/10 at night, at 2 in the morning, as what it's doing during the regular day session. So naturally, the regular day session is going to give you much stronger levels. But the overnight session, the levels that we're going to find in the overnight session are still being created, and we don't want to not take advantage of them or not, look at them as useful because they are. Goldman Sachs, Morgan Stanley, all the big players, they have 24-hour trade desks. So there's guys working shifts. They got 3 shifts going on. So they're trading. Yeah, most of the people, the volume is during our day session, but at night there's still people trading, and there are those levels. So levels that are being formed aren't generally being formed by a bunch of 1 and 2 lot traders. They're being formed by some bigger players. Yeah, there's 1 and 2 lot traders trading at 3 in the morning, but those levels are still created by larger bulks. So I would use the overnight hours. I don't have a problem with using levels that come off of those, but let's just go back a little bit. Mm-hmm. Before online trading came around and people, everyone could open up an account and be a professional trader, it was just you were on the trading floor. There were professional traders on the trading floor, or there were professional traders that would call orders in, and those orders would get flashed, into the pits. But that was all done, like if you traded S&Ps, between 9 a.m. or 9:30 rather a.m. Eastern time till 4:15 p.m. Eastern time. If you didn't have a trade on or get out of your trade in that period, that was it. There was no more trading. So there was no, after hours trading like that. So all the money, and there were guys making tons of money. There were people that were losing money, and there were people that were just making moderate money. But it was all done within those regular trading hour periods, because that, for a fact, is where the bulk of the volume is. But if you see a strong level or a setup for instance, a shooting star formation that will form at the top of a move. If you see this shooting star formation and it's being triggered at 3 in the morning, and you have an order in to get short, with a stop, market to get you short if it goes below that level, I don't have a problem with taking it, because that's an important level. And sometimes, how many times do you wake up in the morning and you get in front of your screen and you look and you go, wow, what happened? Holy cow, the market fell apart, or the market's up 300 points. What happened? Well, you know what? Wouldn't you like to be a part of that move on the way up or on the way down? Of course we would. And, it's not like they all happen every night, but I'd hate to miss it by missing out on an important level, something that looks strong. That shooting star, I'm going to take that at 3 o'clock in the morning, because that's an important entry point, and it's a very precise entry point, so you could minimize your losses that way. But it's something that you got to take.
Sure.
Yeah. The regular trading hours are much better liquidity-wise, volume-wise, but as far as the charts, when the chart is telling you redirecting, turn right at the next intersection, and it happens to be happening at 3:30 in the morning, well, at 3:30 in the morning is when we got to be turning right at the next intersection. Sure. And naturally, we may not be up at 3:30, so we may miss those trades. Sometimes it does happen. We can't help it.
Right.
But I don't have a problem with taking trades off of levels from overnight.
Let me real quickly share this chart with the viewers. What I did, guys, is I highlighted in yellow. This is the current S&P September contract. I highlighted in yellow all of the moves and volume that happened outside of regular market hours. So everything you see in white there is during regular market hours. What's that?
I don't see anything. Why am I not seeing anything? I'm just...
You won't be able to see it, but you know what? Here, let me just to
okay. I thought you were showing me.
No. But yeah, this is just for the viewers, just to drive it home, because I think there's a couple things I want to clear up.
What are we looking at? I'll pull it up right on my chart.
I'm just showing a 5-minute chart of the current S&P futures contract, and showing volume as price movement. So the important thing for everyone to understand is people believe that sometimes they think it doesn't move in the pre-markets. If you look last night, what happened in the S&P 500 from the close of market yesterday to the open of today, there was major swings in there. I mean, it was moving all over the place. It was over a 25-point trading range, bouncing back and forth. There is plenty of activity, but notice at the volume at the bottom, the volume is almost gone. I combine those two words there, the volume. It's bottom volume. So I get what Alan's question in here is talking about, are those levels as valid? I wouldn't put as much emphasis on them, but you can't ignore them, right? We don't know exactly what's causing those turning prices. They might be turning because of an institutional buy, but when it's that low volume, it's easy to turn something like the S&P. I could come in with a 500 lot, and that would significantly turn the market at 3 in the morning, versus a 500 lot during regular market hours wouldn't do anything to it. So, right?
Exactly.
So I'm okay taking levels if I see something, a real strong supply zone or demand zone put in the futures market, and you go, okay, I will set up a trade there. But here's the key. If we set those trades up, you've got to say, at least I tell myself this, they're not as strong as it would be during regular market hours, but I'm still going to trade it the same way. Entry, stop loss, price target. If I'm wrong and it doesn't hold, so what? Shrug it off, move on to the next trade.
Exactly. That's what it is. And it just so happens to be, we got to understand that this is no longer an 8-hour market. That's 8-hour days like it used to be. Yeah. These are 23-hour markets. So, there's a lot less volume at 3 and 4 in the morning, but fact is, it's a 24-hour market now. There are, like I said, you got Morgan Stanley and Goldman Sachs, and all the players are trading, you got people in Singapore that are trading during, the evening hours when we're not. Well, they're creating supply and demand zones. So they deserve respect. They're talking about this action.
Yeah. It's funny
during some respect on the charts.
Absolutely.
And like you said something very important before. You said, it might not be that strong zone, but you got to be aware.
Yep.
That it's there. You got to know it. And if we're going below a level, we're going below it for a reason. Even though that level was made on lower volume, but it was a nice level.
Yeah.
It's a point on the chart that everyone in the world is looking at.
Yep.
And we're going to be reacting the same way we're teaching people to react.
Yep. So I cut my teeth on the equity markets. So basically, I'll use East Coast times to make it easy for everybody. My day would start right around 8:30 East Coast time. I'd have an hour to kind of prep for the markets. Then there was that opening rush at 9:30, and I would trade all the way through the close at 4 p.m. And that was my trading. That was pretty much all I did in the equity markets. And what I want to do is for Alan here, he asked, kind of what's the best, do the pre-market levels work? I have other people ask me, what's the best time to trade? I will say this, there's a couple different factors you need to understand with regards to the trading day. There are times when you have better liquidity. That's going to be during regular market hours. Nobody can refute that. It is a fact. Just look at any price chart during regular market hours. That's when most institutions are committed and obligated. If they're a market maker, their job is to make a market by obligation. They have to be buying and selling. In the pre-market hours, they don't have to be there, so you'll get more liquidity during regular market. The second one will be things like order filling and how they process orders, right? There's certain windows of time where exchanges around the world may be opening up if you're trading Forex markets, where you get surges of liquidity and price movement, which will dictate your trading day. I say that because I found out that my best trading is in the opening hour and a half and the final hour and a half of the equity markets when I'm trading stocks. And I only found that out through discovery. And I say that because every one of us is going to have a different point where they say, I trade best at this point in time. Do you have a time for you, Bob, where you're like, I seem to do better when I trade this time?
Well, for one, you said when you're trading stocks is really regular trading hours, right, and that's it. And the opening, which many people don't like to trade. A lot of people say, the opening is amateur hour. Amateurs open the market and the pros close the market. I look at the opening as the pro hour. I mean, so is the close. But, the opening to me, when you have a big move in anything, whether it's in the S&Ps or it's in the, in a stock, whatever it is, let's just pick a stock. You have a big move, like a huge move where you look at it and go, wow, really, what happened that day? 50% of that move was done in the first hour of the day.
Yeah.
And I hate to miss that. So for those out there that are saying, the first, opening is amateur hour, I stay away from that. Well, they're missing a real good part in catching momentum, because when things take off, they usually take off, and many times from the open. I hate to miss that. And now you've got pauses in the middle where it starts to slow down. And that's where I'm standing in the pit, and we're all switching magazines and newspapers. I already read the Sun-Times. He's got the Tribune. Are you done with that sports section yet? Can you pass it over here? And that's what's going on when it starts getting slower. But we're standing around still, and we're waiting for any orders that might be coming in, or we're nursing a position that we have on. Yeah. And thing is, so where you might not be, the trading day, the liquidity might not be so great at 11 o'clock in the morning, because the market's already open. Sure. And people, trends were established and people got their positions going. But the fact is, if the market's going to move one way or the other, it doesn't always give you that instant gratification where it's going to move real fast and bam, I'm up $1,500 a contract. This is great. I did it in the first hour. I mean, sometimes that happens, but let's look at that as rare. Mm-hmm. Most of the time it's a sit and wait thing. And if you're a day trader where, let's just say, you try to get your trades on and hold it throughout the day and maybe get out before the close, or or you're a little bit of a swing trader and you hold a little bit longer, you're gonna try to put that position on whenever it's happening, and you got to nurse that position through the slow times.
Yeah.
And sometimes when it's slow, you don't have the position on, but I can't tell you how many times I walk away because I'm bored out of my mind, and I walk around the corner to my buddy's pawn shop, and I'm sitting there hanging out, just, seeing the show, only to come back to find out, when I walk on the floor and I look up at the boards and I see all the markets are on fast. It says fast going across the boards. And what that means is things are going crazy. Trades are happening so fast. The quotation clerks can't even get it in fast enough to keep them going on the boards, so they're not accurate at what you're seeing on the boards because it's happening so fast. And I walked away, and all of a sudden I come back to fast markets and and the currencies, and I'm like, whoa, wow, what, it's, you never know what's going to happen and when it's going to happen.
Sure.
So whereas maybe historically the lunch hours are dead, things could still happen during the lunch hours, or things could still happen 2.5 hours after the market opened, the regular session, and things generally get slow. So my theory is all day long is a trading opportunity, and this is not the type of business where it's exciting all day long. Most of the day is boring for a trader, and we've got to sit there and wait and analyze or just watch and wait for it to trigger to happen. So whereas a lot of people now think, okay, opening is amateur hour and it's kind of slow between 10 and 11 o'clock. The lunch hours from 11 to 1, that's slow. So, I trade the open and I trade the close. Well, I'm glad you're making so much money that you don't have to trade in the middle.
Yeah.
Let's look at it as, forget about the extended hours. Let's just look at the regular trading hours, and let's look at everyday America working a 9-to-5 job. Well, those are our hours.
Yeah.
And that's where our window of opportunity is happening. And so if we're going to be, trading and trying to make a living at it, sometimes no customers come into my store and I'm sitting there and I'm bored out of my mind waiting for someone to walk in. And well, that's what we're doing with the trade. We're sitting there bored out of our mind. It doesn't mean I have to be glued to my screen.
Right.
I could be walking around the house. I could be out in the yard. I could be riding my motorcycle, and I got a stop in that's going to, get me in when we break out above the hammer bottom.
Right. Yeah, you can always do your analysis. I mean, that's what the beauty of it now. I think as the years have evolved, it's gotten much better from the quote-unquote set and forget type of order where you can put in your entry, stop, and price target. When I started, it was just you had limit buy and market buy on the platforms we were using. There really wasn't even a stop order. It was just you just had to sell it manually. So it's gotten so much better now that you're right. You can, in TradeStation here, which is one of the platforms I use, I'll show you. Let's say, guys, I'm mapping out, this is last night's high in the pre-market. Actually, it was during today's high, so really like 4 o'clock in the morning. You can see this little yellow box I put there. And basically, we just mapped out the highs and lows. As the session opens, you can be using those as potential guide points. Now, you see that it actually came up to it this morning. I'm playing hard red edge right now, Bob, so I know you can't see it. There was only a 5-minute candle that it sold off. So obviously Bob probably wouldn't be too interested because he's not looking at a 5-minute chart. But notice,
choking.
Oh, God, don't show me the 5-minute chart. So you guys can see that it popped up. But what's beautiful about this actually is that level that was kind of a high in the pre-market on the S&P last night. It acted as a minor supply level. It ripped through it. All of a sudden, you can see it came back down and tested it, and from that, it did nothing but look back. So that level, which formed in the pre-markets, to me is valid. And I think, going back to Alan's comments of, are they valid? Yes, I do believe they're significant. I don't believe that they have the same weight, for me personally, as a level formed during the regular market hours when the equity markets are open, but I still find them very valid. Now, to the...
Absolutely.
And to the question of what time is best, and that was kind of the clickbait for today's show, I think what I gathered from Bob's comment there is, yes. What time of day is best to trade? Yes. because there's opportunity through it all. But as the day progresses, there's this list of things that you're paying attention to, which could bring more risk or less risk to a specific time of day. For example, you talked about the opening of the equity markets. You've got institutions order filling. I mean, there's huge volume happening on the open and close of the equity markets. That's can be a risk to you if you don't know what you're doing, because things move very quickly because of that volume. So, I can't say there is a best time. I found out through looking at spreadsheets and my trade results what time is best for me, but I think everybody will be different. Roger Best, who's one of my favorite guys, one of my students years ago, his best time of the trading day is the middle day doldrums, where most people say it's boring and nothing happens. And that's when his bread and butter is being made in the market. So
I love those times.
He loves them because he doesn't want these huge swings.
You know why? Because when the cat's away, the mice will play. And sometimes when there's little liquidity there and a big order comes in and you're there to capitalize on, jumping in with it.
Yep.
I want to be there for that. That's like from Christmas to New Year's. When my kids were young, and I could take them. I didn't have to stick to the Christmas to New Year's, holidays for school. I could take them a week later, take them out of school for when they were real young. When I didn't mind taking them out of school for a week. I mean, obviously, when they were older, I wouldn't take them out of high school for a week, to go on vacation. But historically, the market's dead from Christmas to New Year's. You look at the market. The trading floor was a morgue, pretty much. But everyone would take off and go on vacation. I wouldn't. I would stick around and, hang around the currencies and look for some action in the currencies for anything going on. But like I said, when the cat's away, the mice will play. And I would find there was less competition. So everyone would take off, not everyone, but many people would take off and go to vacation during Christmas through New Year's. I would go a week or two later and take my vacation with my wife and kids.
Right.
And only because, there was opportunity. Even though it's dead, markets still move. And all of us have been there where the market has been totally dead. And then we look at it and we're like, whoa, what happened?
Right.
Wow, this thing has just drifted up out of nowhere. It's third higher.
It doesn't even need volume, because you have so few participants, it doesn't take much volume to all of a sudden have it move.
Right, and if it belongs up there, it did it on little volume, and we missed the boat because we were out gallivanting around because we don't trade from 11 to 12.
Hey, come on, you got to set rules and enjoy your life, Bob. The entire world isn't about markets.
Wait, Merlin, the way I talk, don't do what I say, or don't do what I do what I say. I'm going to tell you what I tell my kids. I mean, I was one of the laziest guys on that trading floor. Let me tell you, I took so many breaks going here and
Bob, you said was, aren't you?
And getting off the trading floor just to get off because I could. And I mean, I was a lazy, I probably could have been somebody had I stuck it out a little bit longer.
Oh, I could have been somebody. I could have made the big time. I got to ask a question here. This is from Caitlin. Good to have you with us, Caitlin. I haven't seen you in a long time. I have to bring Bob on the show for Caitlin to finally come back and watch this show. Caitlin says, do the institutions push price in the overnight session to get price to a level where they want to buy or sell once the day session comes? Good one.
Absolutely. Absolutely. Let's put it like this. Let's just say the market's been drifting up and we're all long. And some of us are long for a couple weeks, a couple days, a couple hours, whatever it is. And we're in a nice little uptrend going up. Now you've got the markets. You've got, let's just say like a Goldman Sachs. It's got a customer that's got to buy stuff. I could buy $10 million worth of S&Ps right now, and I could fill that order in 15 seconds. 20 million. I could do $20 million worth of S&Ps, $20 million worth of currencies. I could do $20 million worth of anything and fill that order right now in under 30 seconds. I'm widening it a little bit more because it'll take me a while to write things down. And how do I do that? I'm just going to bid the market up. And when that market's at full retail, everybody in the world's going to be selling to me. And then the market's going to get offered right back down. And I just filled 20, 30, 40 million dollars, and I did it in under 30 seconds. Well, I'm not going to have a customer for too long if I keep filling orders like that. That customer is going to come up to me and he's going to go, Bob, you know, every time I give you orders to fill for me, and I'm not an order filler, I've traded my own account. I don't fill orders for anyone. But they're going to go up to that order filler and, Bob, every time you fill orders for me, I get filled at the highs of the moves when I'm buying. I get filled at the lows of the moves when I'm selling. You butcher my orders. I like you. You're a nice guy, but I'm going to have to find another broker because you're costing me too much money. So bidding the market up doesn't work. So to answer Caitlin's question, how could I'm Goldman Sachs. I got all the money in the world, and the market's real thin at night. What I mean by thin, there's no volume. It's very illiquid. So let's just say we're kind of near a demand level. It's not maybe a real strong demand level, but it's a demand level nonetheless. You got a 15-minute chart, which, you know, I'm not a real big fan of the intraday charts, but nonetheless, lots of people are. And you got a beautiful demand level showing up on that chart. We're above it. And I'm Goldman Sachs. And I got a customer that's got to buy a lot. So I could butcher his order and bid it up like I just told you I could do. I'm going to lose that customer. Or what if I offer the market down? I'm looking at this chart. We're not that far away from a demand zone on the smaller time frame chart. It doesn't look like much on the larger time frame chart. But on the smaller time frame, it looks like a decent demand zone. And I know there's got to be a bunch of players out there that are probably buying off that demand zone. And if that's the case, those same players, they have sell stops to get them out if they're wrong somewhere below that demand zone. So me, Goldman Sachs, I'm going to go fishing. I'm going to go on a fishing expedition right now. The markets are slow. It's 3 a.m. We're kind of near a demand zone. We could be 5, 6 ticks away. How many times have we seen this? The bids and the offers just drop instantly in 1 or 2 seconds. The bids and the offers completely drop. And then in the next second, they both go back up to where they originally were. So what happened there? Goldman Sachs, now I don't know this for a fact, and I'm just using Goldman Sachs now as the name because everybody knows who Goldman Sachs is. So they're happening to be my example right now. So Goldman Sachs knows that there's a lot of players playing at that level. And if they could get it below that level, there might be 500, 1,000, 2,000 stops down there.
Right.
Remember, this is a global game. There's not only a couple people, sitting in the crowd trading S&Ps. There's people all around the world trading S&Ps and currency and gold and crude oil and all these products all day, all night. Okay, so while this is happening at 3 a.m. and we're near a nice demand zone and I'm Goldman Sachs and I got to fill an order, but I don't want to butcher it by bidding the market all the way up to buy these that I got to buy. What if I have to sell? What if it takes me, at night when you look at the matrix, there's not a lot of bids there. There might be 25 at the first price, 15 behind that, another 10, 6, 20, maybe 3, ticks later. If I'm a big player and I could cancel all my bids that I've got in there, because I'm going to show bids in there to show support to get other people to join those bids. Well, when my bids get canceled and then I run the market down. How do I run the market down? Just start, sell 500 at the market. When I sell 500 at the market, it's going to just start hitting bids. And I might not have to sell 500 at the market. I'm looking at the matrix. I'm counting up the bids that are there. There might be, let's just say 280. It looks like there's a total of 280s sitting there queued up. I'll put it in order. Sell 300 at the market. Right. And what happens? I'm going to sell 300. Now, this is done with algorithms, with computers. The computer is going to sell 300 at the market in the sell account. I've got a buy account on the other side that already has orders staged to buy at those stop prices that I'm running the market down to. And what's happening when I'm running the market down, I'm triggering all those sell stops, and they're all going to all those buy limits that I have sitting there on the other side, and zip, zip, the market goes from down here below demand, it's back up above demand by 4 or 5 ticks. And if you're watching the screen, you just watch yourself get stopped out. The market just dropped by 5 or 6 ticks, rallied back again 5 or 6, 7 ticks. It's right back to where it was, and you're sitting there going, holy cow, what just happened? Right. I just got stopped out of this trade. The market is right back to where it was 10 seconds ago, and it's starting to move up, and it's doing it without me now. And I was dead right on the trade. So, yes, Caitlin, yeah, they tend to, at night when the market's thin, the bigger players, the money, they can't see your stop. It's impossible. It's against the rules and regulations. They can't see the stops, and those orders can't be disclosed to anyone. But they know where your stop is. Yeah. How do they know? Look at that beautiful demand zone on that 15-minute chart, and I'll bet you there's 500 stops below it.
Yep. It's funny. I wanted to share. Let me just real quickly share the matrix or the dome, whatever you guys want to call it. This is the ladder for the S&P contract right now. And I know the font's not the biggest, but you guys can see in blue here are the current bid sizes. These are all the people who have orders in the market to buy right now. And right now it's trading at 33.83 and a quarter. Excuse me, COVID over here. If you sent 100 contracts, if you just unloaded 100 at market, if you sold 100 at market, you would all of a sudden move the S&P down 2.5 points just with 100. And these guys have the weight to throw it around because right now the liquidity is obviously much lower than it is during regular market hours. We could look at this again when the market is open and it's still rather liquid right now compared to what it will be like in 4 hours. So it's easy for them to manipulate it. And Caitlin, you're correct. They do it. I think that it's not something that's like illegal or anything. They're just using their knowledge of the markets, of the low liquidity factor, and pushing things around. Now, Hassan says, should we be more wary of stop hunts during after hours and regular trading hours? Just understand that in the regular market hours, it's harder to move the S&P, right? 100 lot's not going to do squat during regular market hours. In after hours, could have a huge impact. So I think you just need to be more careful in the after hour session because, again, it's like I use the swimming pool analogy all the time. From 9:30 East Coast time to 4 p.m. East Coast time, futures markets, extremely liquid. But when that bell rings, that swimming pool, which is like an Olympic-sized swimming pool with diving boards that are 10 meters tall and you could jump and never hit the bottom, that liquidity goes away. And now that pool is like maybe an inch deep of water. You could seriously injure yourself. So you just have to adjust your style and how you approach it during those regular market or after-hour session. Certainly, I would go with a smaller contract size or share size if you're doing equities, and maybe you want to have yourself a little bit wider stops.
Yeah, I won't be on the 10-meter platform. I'll go back down to the 3-meter.
Right.
The 3-meter board.
Yeah, I don't. You won't catch me on that stuff anymore. But Batnai says, how do you remedy that, Bob? The stop hunting. You can't. You just need to know how they're playing their game, right?
At night, your stop's going to have to be a little bit wider, and you're going to have to be more selective on your zones. And that's why I'm not a big proponent of these 5-minute charts and 15-minute charts. They work. People make money off them. I mean, they definitely do. It's just that, like it says in the material we have at Online Trading Academy, if you look at the futures on the futures class, I don't know what it says in the other ones because I only teach futures, but on day 3 or 4, I think it's day 4 when they're talking about indicators, they say these indicators, they work in all time frames, but they're more significant in the larger time frames. So, you know, if they work in all time frames and they're more significant in the larger time frames, what does that say about the larger time frames? They must be more significant. And charts are indicators. So the larger time frame charts must be more significant. So those levels that we find on the larger time frame charts are generally, you know, more significant. And those are the ones that the big players are really trying to, you know, that's where they're putting the big dollars at buying. They're purchasing smaller numbers at those intermediate levels where they know all the smaller players are playing at.
Yeah.
And those smaller players, I'm not saying they're not making money. They're making money, and everyone's making money, and everyone's happy. But what's your definition of money or good money? And how happy do you want to be? So, you know, if some people are making $150 a day, they're thrilled to death, and they're happy, and they're fine. You know, and we start making a little bit more and a little bit more. Well, when you're on the larger time frames, the profits are generally greater than when you're, you know, if you're a 15-minute trader, you know, those are the charts you look at, and those are where you look for levels to get in and out at. Will make money, you know, but it's all proportional. You know, if you go to a larger picture, your supply and demand levels are a lot farther away from each other. So, you know, and from a surfer's point of view, and you're out in California, Merlin, you're in surfing paradise as far as I'm concerned. And, you know, these surfers, you know, they're paddling out 200 yards and they're riding that wave all the way to shore. They're not jumping off. I've never seen anyone jump off. I've seen them fall off the board, and then they go paddle out again to do it. But I've never seen anyone jump off in the middle of the board and go, wow, you know, deliberately jump off and go, wow, that was so much fun. I'm going to go paddle out another 100 yards and do that again. They don't jump off. Right. They're riding that thing up into the sand. They're taking it as far as they can go. You know, and that's what we're doing on trading. If the trade is going your way, why get out?
Right.
Why just say, this is all the money I want to make? Tighten up your stop, and instead of making $650, you make $500 on that trade. And that's if you get stopped out. But what if you don't get stopped out?
Right. Yeah. You just keep on going.
You got to turn it into a $1,500 trade.
Let me. We got 2 questions coming. Actually, there's a few questions, but I don't want to take up too much of your time. I'm already past my allotment. Raj was talking about, do you hold your winning futures trades overnight? There's another question talking about overnight positions. So you're not exclusively a short-term. You're not exclusively a day trader. You're somebody who will ride it for days to weeks, correct?
Oh yes. Well, I'm not a big one, me personally, of holding for weeks, because my style of how I move my stops doesn't really allow me to stay in for weeks. But days, yes. And, you know, so I catch some nice moves. I don't catch these 3-month moves like, you know, some guys do, you know, when they're making $10 million on a trade. You know, I'm not catching those moves. But, you know, I'm catching some nice daily moves. So do I hold positions overnight? Let's look at what overnight is. When the S&P closes at 4 o'clock Eastern, it reopens again at 5 o'clock Eastern. S&P's close. They reopen again at 6. So that's your overnight.
Right.
So it's not like, you know, you have exposure for 15 hours where something could happen and, I could lose a ton of money. If you got the S&Ps, you're long or short, or the currencies, you're trading them. When the market closes at 5 o'clock Eastern, at 6 o'clock they open up again, and there's my stop. Right back into the spot where it was before. So don't be afraid to hold it overnight. If you're looking at that chart, and that chart looks like it could go further and keep on going, and you look to the left and it doesn't look like there's any resistance to keep it down, why get off the board? And why say this is all the money I want to make? Because as futures traders, there's a little bit of greed there. We're in here to make money. We're here to make good money. So as a futures trader, I'm trying to take whatever I can out of this trade right now. It might be the only trade I make today. So why not ride the wave? As long as it's going your way, why look at a level? This is just my philosophy. Why look at a level and say, okay, I'm going to get out here, even though that level looks good? Because when you say I'm going to get out here, you're saying this is all the money I want to make on the trade. And I want to make a lot more. So rather than say, I want to get out here, I'm going to take my stop and I'm going to tighten it up. Because as the market's moving my way, I keep widening my stop a little at a time, a little bit here and a little bit there, to make it wider and wider so I can withstand the swings. But when I hit a real good zone where the market may turn at, I'm going to tighten that stop up. So like I said before, I might take a $650, and this is on one contract of the S&Ps. I might take $650 of profit right now, because we're sitting at a supply zone. I might take $650 worth of profit and turn it into 500.
Right.
I'm okay with that. If I walk away with 500 today, I'm good. I have a good day going. But what if I take that 650 now? What if we go through the supply zone like we've all seen happen in the past? We've all seen the most beautiful level we could possibly have not work.
Right.
Not everything is 100%. And so, well, if it doesn't work, rather than take off money off the table at that point, I was taught to be greedy. I'm going to add on to my position. We're going through the level that I would have been getting out at, and that level didn't hold. It ate through it. That's where I'm going to buy more.
I like it. I mean, it makes sense.
We were taught never to add to a loser. Why? Because I've watched that put so many people in the poorhouse doing just that.
Sure.
All right, what about adding to winners? It's the same thing, just the opposite.
But one's making you money.
If you add the winners and it's making you money, the money's just pouring in.
Right.
It's sick how it pours in when you're adding to winners, and you're right.
Right. I do a thing called, I call it snowballing, where I will be in a position, and then as it starts to go in my favor and getting close, I'll just keep putting more and more and more in, and pretty soon you're in this. You almost, I've been in a few times where you go, this position is almost way too big for me, but it's all profit at this point. Keep that stop moving up and let it go, because I tell you, Bob, I know you've seen this many times as well as me, where we'll be in something and you get out and you made your 10 points and you're like, all right, yes, I made my 10 points on that. And you look at it a day later, a week later, a month later, you're like, holy cow, it's up another 300 points from there?
Right.
Shoot, if I just let that damn thing run, we wouldn't be talking this.
That's why, Merlin, the big picture, those large charts, I see those moves. I see those moves happening on the big picture. And I've been calling some nice, huge moves. Well, they don't all happen in one day. Like you said, all of a sudden you look 2 weeks later and you're like, wow, what happened? That's what happened.
I love those ones.
Time frame, and the lady is going like this, redirecting, turn left at the next intersection. Well, turn left at that intersection because we're breaking above that trend line, and it's time to go along.
Right.
Some of us will hold it, for a day. Some of us will hold it half a day. Some of us will hold it a week. And we're all going to be a little different and have reasons to take profits. But, listen to the charts. because they don't lie.
That's right. Bob, I'm going to try to wrap it up here so we can get you on your way. I know you spend a lot of time here. Joel said this, and I think this is maybe a good segue for you to talk about your signature series. I know you have one as well. Joel says, Bob, I registered for your class in September. What can I expect from your class, and will you have any materials for the students?
Yes, I do have material for the students. I have handouts that I give. I'll put them on thumb drives for you. And expect 3 days of technical analysis. Made simple. Made simple. It's got to be made simple. And I got to do this for the engineers.
Like that.
Because the engineers, they don't understand simplicity. Engineers' brains don't work the way most people's brains, normal people's brains work. Engineers are too smart. There was a man on the trading floor, I'm not going to name his name, but he was a brain surgeon that couldn't make it. He was a retired brain surgeon that just, couldn't make it down there and left. And I know too many idiots down there that make a lot of money. So, technical analysis isn't that tough. All it is a bunch of rules, and if we're disciplined and we follow these rules, we should be able to do okay. And the main rule, and Merlin, you'll definitely agree, is don't lose too much when you're losing on these trades.
Oh, yeah.
Because the losses is what puts us out of business. Those are our tools for our trade, how we make money. We make money by leveraging the money we've got. And so if we don't have any money left, we can't leverage anything.
Yeah, and there's two things with that. It's one thing is losing the money. Obviously, there's the monetary pain. But I can tell you from firsthand experience, the psychological damage can be much worse than the physical, than the actual money. Because when you lose that much, especially if it's on one trade, so I had a trade years ago in Cisco. This was back when I moved to Italy in 2001. Cisco reported earnings, raised their forecast, it gapped down like 10% and did nothing but sell off all day. And I kept buying all day long, ended up with $15,000 loss in a day. And at the time, for me, that was a pretty big loss. It was so bad I wrote a song about it. It's the Creedence Clearwater Revival, Lodi?
Uh-huh.
And oh no, I'm stuck in Cisco again. So one day I'll write the song, but it took me months to recoup. And that was, that's years into my trading career where I had a pretty good understanding of markets and had discipline, had a plan, and it completely screwed me psychologically. So don't let that happen.
Such a bad mistake. And I was told many years ago, it's not the monetary account that puts you out of business. It's the mental account.
100%.
And when you destroy yourself mentally on that one bad trade, try and make another trade today. You can't even think straight.
Yeah.
So you can't destroy your mental account. Once the mental account goes, we're dead. We're gone. Yeah,
I don't know if you've heard me say this. I know the viewers have, but you might appreciate this one. I used to do a lot of presentations at the Traders Expo, and I did one kind of like how to be a part of the 7% of traders who succeed, because the statistics show Bear Stearns did something that said like 93% of traders fail. And I walked in this room, a couple hundred people sitting there, and I just said, all right, show of hands, how many people here are trading to see how much money they can make in the financial markets? And like almost everybody's hand went up. I said, okay. Pointed to the guy that didn't have his hand up. I said, why isn't your hand up? He says, well, I don't know, because I'm nervous. I said, okay, well, everybody that put their hands up, you're all going to lose money, because you're focusing on making money. I said, the ones that didn't put their hands up, you're probably understanding that trading is about losing money. And if you don't lose money, you will make money almost organically. It's a byproduct of just following your rules. So as long as you don't take that major hit, you'll be fine in this. And unfortunately, too many people get greedy and they take way too big hits. And they're done.
It's the major hit. It's the greed. Forget greed, because I teach greed. It's the being a pig.
Yeah.
See, greed is good, but being a pig is not. And there's a fine line between greed and pig. It's when you become the pig, that's when the market doesn't, when it really zaps you and just stabs you right in the heart.
Yeah.
And
all right, Bob, when's your signature series? When's it coming up? It's soon, right?
I'm doing one, if next week is the first week in September.
No, I don't think it's next week.
Following week. It's the week after next. I'm doing one. And I'm going to be doing one every month. I just put one on in September. I believe we put one on in October. And they're already asking me about November.
Good. Keep them coming. Guys, if you want to know more information, you can go to tradingacademy.com. If you're a graduate, you have access to this one. For his signature series, there is a prerequisite that you take the futures course, and that's just simply so you know the terms and nomenclature that we use in those classes. You can find out more information by going to tradingacademy.com. You can click locations if you're not familiar with Online Trading Academy. They've got centers all over the world to find out more information on Bob's signature series. Bob, I want to thank you so much for coming on again. I just looked at the calendar. Last time we did this was June 3rd, so it's been over 2 months. I'm going to be busting you so I can get you on this program once a month.
Well, we'll have to do that because I enjoy doing it. I have fun.
I can tell. I do too. I love it.
I become somebody.
Someday I'll come over. I'll fly out to Chicago and I'll take the other wall. I'll be underneath all the hockey pucks and we'll do it from your sports suite over there.
All right, sounds good.
All right, Bob, thank you so much for coming on today. I do appreciate it. I hope the remainder of your trades go fantastic this week.
All right, thank you, Merlin. You too. We have a great week. Everybody stay safe out there. See you all real soon. All
right, take care. Bye-bye.
All right, bye-bye.
Guys, that was Bob Dunn coming to us from Chicago. Many years on the floor of the Chicago Mercantile Exchange. Just got some fantastic stories. The guy is great. He's one of those guys that's just traded his own money for year after year after year. And the things we can learn from people like Bob, to me, is one of the reasons I love being with Online Trading Academy, is because I get to meet so many great traders. And you learn some new things. I don't trade the same way Bob does. There's certainly things that Bob does that I do not do. Doesn't make his style right or mine. We have to find out what our niche is. But there are certain things that he does, I think, really keep it simple, and you can pick up and easily apply to your trading style, whatever it may be. So again, if you want to know more about Bob Dunn's upcoming signature series or futures classes, he's with the Online Trading Academy. You can go to tradingacademy.com to find out more information about any of those. He's also on Twitter. He tweets out a lot. So for those of you who might not know who Bob Dunn is, I believe it's Trader Goalie 1. Let me see real quick just so I can make sure I get you guys the right info. You can follow him on Twitter. He's always posting a comment about, hey, if the markets get above this level or below that level, you should check it out. So let me see, just so I make sure I have it up there for you guys. We'll go to our picture here. And yeah, it's at Trader Goalie ONE, Trader Goalie 1. That's Bob Dunn's Twitter handle. So I encourage you guys to check that one out. You can see here, for example, let's see, what did he talk? He had one in here yesterday talking about ES. Yeah, look to go long ES if it gets bid above 33.78 in the morning. Oh, well, there you go. He got that one done. So yeah, he does this pretty much regularly. I know a lot of you guys like that. All right, what do I got to talk about? I had a bunch of listener questions, but I'm already way beyond time here. So I'm going to go to our economic calendar and earnings calendar. Tomorrow, of course, is Cocktail Friday, so bring a nice frosty beverage. For those of you who might be new to the show, do me a favor, click that subscribe button and give me a thumbs up. Tomorrow, we'll have a nice frosty beverage and cover what's been going on in these markets. I want to show you kind of what happened out there today. There was some interesting pieces of market information. For the U.S., we jumped back up above that 1 million mark on unemployment claims. It's not like I know it's hard to imagine that levels on economic data act as supply and demand, but it feels to me like this 1,000 mark is going to be a challenging mark for the U.S. We are now back up to 1.1 million unemployment claims for the U.S., and that Philly Fed Manufacturing Index came out right where we said. I said between 15 and 17. We hit 17.2, which was below expectation. So both of those pieces that were bad news, which started our market off on a negative note, but of course the optimism overwhelmed it, and we just bid it on up. You look at the earnings front, there was one surprise today on earnings, which really shocked me, and that was Ross Stores. Ross Stores obviously shut down, and how good are they going to do? They reported earnings that were negative, but nowhere near expectations. They only lost 13 cents versus 31, unless the guy who reported this has dyslexia. Everybody else reported great except the Estee Lauder company. No need for makeup when you're chilling at home, right? Ladies are going, I'm going au naturel right now. For tomorrow, what do we got cooking? This is for the 21st. Earnings, you've got Deere and Foot Locker. Obviously, Foot Locker probably is not going to do very well. John Deere and Company probably is going to do well because people are distancing building projects. Earnings or economic calendar. This is the big one for tomorrow. It's basically global manufacturing and services PMI numbers. You see it for the euro, for the British pound. You also have it for the US. That's 15 minutes in, so be careful on the open. You also have retail sales coming out for Canada. They're expecting a pretty big jump in retail sales to our neighbors to the north. We also have existing home sales coming out. Next week is new home sales, which I'm very interested in, but existing home sales are expected to spike too because that 30-year is just dropping and dropping and dropping. I don't know if anybody here has gotten it, but I know some people are getting 30-year fixed under 3%. Are you kidding me? All right, guys, that will do it for today. Again, I will be alone in studio tomorrow, so if you have any comments, questions, show topics, I have a bunch of questions already slated, and I'm sorry, Tom, you had a really great email that you sent me. I loved it, and I wanted to talk about it today. I just don't have time, which gives me something to talk about on tomorrow's show. If you guys know by now, I am pretty much, whatever you guys want to talk about, I will do that. So send me in comments, questions. You can go to TraderMerlin.com to send those on in. Also, I have the calendar for next week up. We've got some great guests coming next week as well. So send in your questions at TraderMerlin.com, or you can put them down below the YouTube video. That always helps. Until then, happy trading, everybody. I will see you tomorrow.